So earlier today, Tesla put out their Q2 2022 results. So these are their results along with what I predicted and what Wall Street predicted. So the first thing is, what did they actually deliver in cars? And the numbers that they came out with last quarter, or at the beginning of the quarter, beginning of the month, they actually did the same numbers. So I think they're actually getting their numbers really well now. They know exactly what they're going to be delivering. So that's a good number to see, that they're actually being able to keep that number the same. Giga Shanghai, 78,906 was a pretty strong number for them for June. If you run that out for an entire year, you're talking about almost 1 million vehicles in a year, at least 900,000 vehicles in a year. So that's a huge number for Tesla. When you're talking about them wanting to get to about 1.5 million vehicles this year, that's a good number for them to be at, and they probably will hit that number if they can keep that runway up to 78 to 79,000 a month. And then of course the Model S and X was pretty good. So the next one here is their gross revenues, and this is where I got taken back by their revenue per vehicle. I was really impressed with that. $56,000 per vehicle is a huge number. Now, mind you, that number is actually after I take out the auto credits. So that's a huge number, because you really should include the auto credits, because that is part of the vehicle that they're selling. But yeah, that's the number that I go with, just so I have revenue credits out of it, just so I don't have to have people say, well, auto credits are causing it. Yeah, well, auto credits are not causing anything. If anything, they're helping their bottom line and making it a little bit sweeter. But the other big one was energy, 866 versus 539. Wall Street nailed it. The other revenue, so that is services, that is supercharging, other items. Q2, I actually was a little high, but yeah, I was happy with it. Pretty good number there. Going to the next item is gross profit. This is where I had a slight miss on a few things, but overall I hit it really well. So it all kind of balanced out. It's kind of interesting how that worked out. But yeah, my cost of revenue, I thought they were going to hit the 69.75 for the quarter. They didn't. They went 73.79. Wall Street nailed that. Energy, I thought they were going to be a lot higher for costs. I thought their costs were going to continue spiraling out of control because of the chip issues and the Telsa, or the solar roof system. Instead, it actually dropped and actually made money. I was really impressed with that. Revenue, for another thing where I thought they would be running about midline there, they actually hit that number really well. And then so their total cost of revenue was actually a little bit higher than I expected because of the auto. But when you add in that I had predicted losses in two areas and a really good beat on the other area, yeah, it ends up being that my gross profit was a little bit better than Wall Street. Now comes operating income. This is where I got a little beat up on initially when I saw these numbers, because it didn't make sense to me when I first saw them, when I looked at them, because I'm like, they had a Bitcoin impairment and they didn't have an SG&A, the A being the impairment part. They didn't have the impairment cost. So yeah, that was part of the deal. In the operating expenses, I did add on 142 to that number, so you can kind of understand why it's a little lower. I had combined that earlier in other expenses. So that's their cost for restructuring. So that is their layoff cost for all the white collar workers. So that was the big number there. But Wall Street, for some reason, didn't know that there was going to have an impairment cost. So that's where it comes into. However, if you were to take out that impairment cost I put in, which was about $510 million, and you just wipe it out, my numbers are actually pretty well dead on that, because that would be 1,022, and their total cost was roughly 1,100 for SG&A. So I was pretty happy. The big one for me was I expected their R&D to continue going up because they're still making more products, they're still doing other things, but it went down. 667 was obviously a lot lower than the last couple quarters, so I was pretty happy with it. It's kind of in line with what they did in quarter 3, so I'm not sure if they're basing their R&D expenses based upon how much profit they're making, because that would make more sense. So share income. So this is a lot of the miscellaneous expenses that are taken out. I did have to adjust this a little bit from when I was doing it previously. I had put the interest, gains, expenses, and other income. I only listed the interest expenses, but I decided to combine them all in one. So what you see there is if it's negative there in parentheses, that means it's a negative number. Provision for income tax is obviously going to be a negative number. The net income for subsidiaries, again, that's if it's negative there, that's a negative number. I was expecting a loss overall for subsidiaries. They actually did a gain again, so that was good to see that they got their subsidiaries to actually start making money for them again. $2 million is still $2 million. The big one for me was that analysts don't predict these numbers, which is kind of annoying. So you kind of have to take their previous number, subtract it off from the share income, and figure out what their total costs are going to be, about 326. And in fact, Tesla actually barely had that much of a loss in this area. It was, if you look at the numbers, like a 185 number. I did roughly 150, so I was pretty close on that regard. Analysts were off by 300. They're double what they ended up doing. It was like 326 was they were expecting. So that means that my share income actually got a little closer to Tesla's, but I'm still off there. Analysts were still off on their share income again. Just other items. The next one is EBITDA and earnings per share. So what we have here is depreciation, amortization, and impairment. As I said, that $1.4 billion DAI there is mainly because of the $500 million impairment. So if you take that out, you're talking 978. I'll take that number. Whereas the 922 as an actual. Stock-based compensation, I was expecting a little bit higher stock-based compensation, 423. I was thinking because the lower share price, they might actually get their people buy more shares, but I ended up not working out for them. So overall, the EBITDA, when you compare numbers, ends up being roughly equal to what Tesla was doing, a little bit higher. Or, well, Tesla was a little higher than what I predicted. Net income for common shareholders, obviously I was a little lower on that over analysts. Obviously I thought I was expecting a little difference in impairment items, but overall, if you take the impairment out of that, because that also counts for the impairment, you're talking another $500 million in there. So that's 2.4 billion versus 2.6. So it's pretty much in line, and that would increase my earnings per share roughly by about 50 cents or thereabouts, roughly. So it would have been closer to about 2.3, 2.2. So yeah, it would have been a pretty good number. So yeah, that's the results. I was pretty happy with the overall results. I have some additional notes here. The first thing is energy. Nice to see energy growing. On the earnings call, they talked about the mega pack factory in California is up and operational, which is awesome because they need that factory to take care of the backlog of mega packs. Their mega pack backlog is insanity. I think Hawaii is like the only state right now that they're actually providing basically new installations this year, which is understandable. Hawaii has a massive issue with having to import their coal because there's no coal being mined in Hawaii, so they have to import all their coal. So they definitely want to find a way to stop importing. Next is cash. This is free cash flow, so this is just cash sitting on the books. It went up 15% over last quarter. A lot of that was because of Bitcoin. As I said, they sold a lot of Bitcoin. CapEx was holding at 1.7 billion. That was a nice number to see. It's been going up, but it actually held. So it's nice to see that them actually holding that number. Stock compensation, as I said, is pretty low. This is the lowest in this quarter 2 of 2020. Interest expenses, it's only 44 million. It's not on the thing here, but that's part of that where I combine a couple lines together. So yeah, only 44 million. That means that they're not paying that much in debt expenses at this stage, which is what you need to do. This current economy is in a recession. It doesn't feel like it a little bit, but when you have inflation the way that it is right now, people are not buying like they used to. And as a result, if people are not buying, there's your cost. So that's what it comes down to. Finally, the free cash flow. It's holding steady. You're keeping their free cash flow. And the biggest thing, as I said, is the debt going down. Another item I saw on the list was the fact that their assets they have on hand that are freely available to sell off if they were to go bust versus what they owe in liabilities is actually greater. It's actually greater than what they own in liabilities. They actually have a positive margin in that regard. I was a little shocked when I saw that. So that means that anything else goes to shareholders. And that's a great thing if you're a shareholder. So at the end of the day, you're talking 50 cents just in cash that's available for people to, for Tesla to get rid of if they have to. And then the rest of it is just stuff they own that they can sell off, and the assets or the value of those assets is roughly about $35 a share. So I was pretty impressed with that number. So if you have any questions about this, or you want to watch future, if you want to watch what I discussed with my Tesla weekend, there is a video up on his channel. You probably came from that channel, by the way, because I've been working with him on a couple other things and talking with him on stuff. So that's one you can definitely look at. Otherwise, I'll see you guys in the future. I may be putting together a little chart on that aspect of liabilities versus free cash flow, or free assets. So that would be a nice one to see what all the companies are sitting on if they're going to have issues going forward. So I might be looking at that. There's other videos I'm looking at doing. If you have any suggestions on a video that you're possibly wanting me to look into regarding financials or other aspects, just leave them know in the comments. I may look into it or may not. Just depends upon what my schedule is like. Adios.